Hello. Just want to send you this video with respect to the consignment and joint venture, which I have already sent you in the form of PPT. It has been shared in the group. I hope you have seen it. Fine. Coming to the concept of consignment, I'll send you some of the problems in order to clarify the doubts what you have for the consignment. Fine. So coming to the concept of the consignment, let me just explain you. What is basically a consignment? See, consignment is the process of sending the goods from one person to another person. So here we don't have the typical relationship like a debtor and creditor or like a buyer and seller. What happens in case of a buy-sell transaction, or what is the type of relationship we have in case of a debtor or creditor is, say for example, if the creditor, that means the person who wants to sell off the goods to the other person called debtor, he will send off the goods and after a certain period of time he will get the money. So it establishes a typical debtor-creditor relationship, or the same is applicable when we do the buy-sell transaction. But in case of a consignment, suppose Mr. X of Bangalore wants to send some items of his product to B of Gujarat. Now, since X is there in Bangalore and B is there in Gujarat, as a result of which they cannot change each of their business place and be at some other's place. So, Mr. X from Bangalore will send off some of his business product, which he understood there is a huge demand in Gujarat, to Mr. B, right? To the Gujarat person. Now, this Bangalorean, when he is sending the goods to the Gujarat, he is sending. That does not mean all the goods, whatever has been sent by that Bangalorean to the Gujarat, is becoming the permanent items or product for that Gujarat. No. Because the person who is there in Gujarat, he is doing as usual his sell transaction. Along with that, he got a request from his Bangalore friend that some of the Bangalore products, if he can promote in Gujarat, because it is of in demand in Gujarat, so that he will also get some money, then what is the interest involved for that person who is doing this kind of help for that Bangalorean? Yes, he will get a very good amount of commission, because the Gujarati is helping the Bangalorean to get the Bangalorean product sold in the Gujarat market, and for that the Gujarati is definitely going to get a good amount of commission. So there is no transfer of goods permanently taking place from the person who is in Bangalore to the person who is in Gujarat. It is only on the basis of certain amount of commission this has been sent and the transaction is taking place. So in consignment, we don't have a typical buy-sell transaction. We don't have a typical debtor-creditor relationship, because mark these words, these are the words on the basis of which they can frame some fill in the blanks or some objective questions. Then what kind of relationship these two people are having? The consignor-consignee relationship is more of a principal and agent, where the principal is giving the directions to the agent as what needs to be done, and the agent is executing the directives of the principal as and when asked by the principal. So there exists a principal-agent relationship. This is one of the most important points. Now, as the discussion started, there are two persons involved, right? Who are the two persons? One is consignor, another is consignee. Who is the consignor? The person who is sending the goods to the other person in order to sell in that market. He is called consignor. In my example, Mr. Bangalore is a consignor. He is sending some of his Bangalore based product to the Gujarat market. Then what is the person's nature in Gujarat? He is a consignee, because he is taking the goods from his Bangalorean friend and trying his best to push and promote those products in the Gujarat market, yes, obviously along with his product. So what is happening here? There is a consignor-consignee coming into the picture. What kind of interest these two persons are having? Yeah, consignor is definitely interested because his item will be sold, the realization will take place, the consignee will give them the money back. That's fine. Consignor wise, absolutely, it's easy for us to understand. What's the involvement of consignee in this? What for? He is going to take so much of responsibility to sell the goods and take the pain and trouble of convincing the customer. He will get a very good amount of commission, because those goods are not available in his market. He is just helping his Bangalorean friend, and Bangalorean friend for doing this task is giving him a very good commission. There are different types of commission. How many types of commissions are there? We have ordinary commission, we have extraordinary commission, we also have a commission known as del creditor commission, right? So there are how many commissions? There are 3 types of commissions. Ordinary commissions, it will be ordinarily stated like what units of goods are being sold out, what is the total sale transaction, what is the percentage of the commission. It's easy for us to work out. Even extraordinary commission also it will be given. What is this concept of del creditor commission? See, this is something different kind of a treatment what we need to do in consignment. Now, when the consignee is trying his best to push the consignor's product in the market, the customers will take the goods in 2 forms, either in cash or in credit. If the goods are sold out in cash, immediately the debtors is not coming at all. When there is a cash transaction, we don't use the term called debtor actually. So when the goods are sold out to the customers, they are outrightly accepting the goods and settling their payment. That is known as cash transaction. So no question of debtor creditor, no question of del creditor commission. But the moment the transaction is taking place at credit, that is, the customers are going to give you the money after some time from the date of the purchase. Whatever is the credit period allowed, 1 month, 2 months, 3 months, depends, right? Whatever is the situation. So this kind of commission which is coming in place in course of a credit transaction in the business, it is known as del creditor commission. Now, there are 2 types of situation which the students, that is, it's your headache to analyze, understand and incorporate. Chances are very high they are going to pick up the questions from this particular zone regarding del creditor commission. So, coming back to the discussion of del creditor commission, first of all, hope you understood what is del creditor commission, in which kind of situation it comes into. It arises or it is associated with credit transaction, no way connected with the cash transaction, because you're giving the goods and the money is coming. There is no risk of bad debt, there is no risk of non-receivability of any money. So there is no question of del creditor commission. Now the consignor has the every right to tell the consignor, Mr. Consignor, you please decide if the customers who are going to take the Bangalore products being seated in the Gujarat market, yes, there are huge volume of chances that they may not honor the payment completely on time. So which can lead to a successful amount of bad debt. How to treat this bad debt? It is your product, man, being sold out in my market. From my side, I am taking the initiative to promote your product. If the customers are not paying, absolutely you cannot blame me that it is your customer, they took the goods and they are not paying the money. These are the reasons for the bad debt. I just cannot help you. So what needs to be done? Yes, in that kind of a circumstance, Mr. Consignor can obviously say, you don't worry consignee, I will give you a hefty amount of commission named as del creditor commission. You please take the headache, trouble, the charge of collecting the amount from the debtors. Now whether the amount will be collected, half collected, quarterly collected, full collected, that is the complete headache of the consignee. Because for the headache which is going to take Mr. Consignee, consignor is giving him a del creditor commission. So when the consignor is successfully giving the commission whose name is del creditor commission, in case of credit transaction, when there is a possibility that the customer may not the full amount as and when the sales are taking place, then it becomes the responsibility of the consignee to collect the money. It becomes incumbent and it becomes a compulsion on the part of the customer, on the part of the consignee to collect the money because he is getting the del creditor commission, right? There are cases where consignor will tell, no, I will take the responsibility of the collection from the debtors. You please don't do anything. I will not give you the commission. If you are not giving me the commission, definitely I am not going to take the headache and responsibility of collecting the money from the customer. Money also I am not getting. Headache also I will take. That will not happen. So in that case, it is the responsibility of Mr. Consignor when his goods are sold out in Gujarat market, those Bangalore products, if the customers are not paying, if the del creditor commission is not given, then it is not his headache to go ahead with the collection. Then entire collections responsibility ultimately will be incumbent on Mr. Consignor. So these are the two important things with respect to del creditor commission, right? So this is one thing. One more important aspect, just one second. Yeah. One more important aspect we have. So this is about the commission, what I have discussed. This is about the relationship structure also, what I have discussed. Now there will be a lot of stages, a lot of expenses. Let me talk about the expenses. So when the consignor is sending the goods to the consignee, let's say that the consignor is sending the goods to the consignee. What is happening in this case? A lot of expenses will be incurred by whom? By both sets of people, both by the consignor as well as by the consignee. Consignor will also incur some expenses which is known as recurring expenses as well as non-recurring expenses. We all know the differences, basic differences between what is recurring expenses and what is non-recurring expenses. Now here there will be a small level of diversion with our understanding of recurring and non-recurring. When we use the word recurring, when we basically use the word recurring here, it means daily incurred, right? That means it is not specific with the consignment. And when we say it is non-recurring, that means it is consignment specific. Only for the consignment you are incurring, then it becomes non-recurring in nature. And you are incurring not only for the purpose of the consignment, you are incurring for your general course of business, then it becomes recurring. See, in our example, we have started with X of Bangalore sending some goods to another person in Gujarat, right? Now, Mr. X, if he incurs some expenses only he is supposed to do for the purpose of sending the goods, say for example some conveyance charges, say for example some traveling expenses, some other insurance charges, which are absolutely consignment specific. Yes, I don't have anything to do. They are absolutely non-recurring in nature. So we basically categorize the expenses in two parts. One is recurring, another is non-recurring. So the expenses which is incurred specifically on account of consignment, it is called non-recurring expenses. But if he incurs his usual business expenses, say for example interest on loan, he has taken a building, one premise, it is on loan, and therefore he is paying the interest, he is paying the electricity charges, he is paying the rental charge of that premise. That has nothing to do with the consignment. Even from tomorrow onwards, if you stop sending the consignment, all these expenses are there with you and it will be with you. So therefore these are the examples of recurring. So we need to understand the types of expenses, what is recurring and non-recurring, and from the viewpoint of two persons, that is consignor and consignee. Now we have taken and discussed some examples as of Mr. X of Bangalore is concerned. Let's go and take a look at the Gujarat person. Now the other person who is seated in Gujarat, whose name in our discussion is consignee, he will also have two types of expenses. Who are they? Recurring expenses and non-recurring expenses. What is recurring expense? Recurring expense refers to the expenses which Mr. Gujarati is incurring naturally related to the business. That is not consignment specific. But if he incurs a set of expenses which is only on account of consignment, then that becomes non-recurring in nature. Yes, there are examples. He can also pay his rental charges, electricity charges, his other advertisement charges, go down rent and all. What is the relation with the consignment? As because Bangalore product are coming and getting seated in his shop, that does not mean his rental burden has increased, because he has not taken any other premise for incoming Bangalorean goods, for inviting Bangalorean goods. He has no place to keep them, so he has taken one more premise which is costing around 10,000 rent. Nothing like that. In his shop only he is keeping those goods in a shelf. So there is no further invitation of rental charges. But yes, there can be a bundle of expenses which we term as non-recurring and absolutely consignment specific. Who are they? He can clear some duty charges, he can clear some other custom duty. Suppose the goods are coming from a different place. Here we have taken the examples of Gujarat and Bangalore, where customs and all will not come into play. Suppose the goods are coming from the other country. Therefore, you need to pay some tariff, you need to pay the duties, you need to pay the clearing charges and all that. You will not be paying until and unless you are stepping forward towards the receivability of the consigned goods. If X of Bangalore is not sending you the goods, should you pay all these charges? Definitely no. So, with respect to the Gujarati person, if he incurs his general business expenses, obviously they are recurring in nature. But if he incurs any consignment specific expenses, that becomes non-recurring in nature, specifically related to consignment, and more so they are not usual course of business expenses. So this is from expense side. Yes. Apart from this, we have few important terminology to discuss. So I have discussed about the type of relation, consignor, consignee, types of the commission and types of expenses. Now we will gradually move on to the other aspects. Who are the other aspects? Say for example, the other aspects, we have a concept called normal loss, abnormal loss, transit loss, closing stock valuation. These are very important things what we need to know. Let's come to them one by one. First of all, when Mr. Consignor is sending the goods to the consignee, the goods can be of different type. I have not given any type of example in my goods. I have said some goods, which can be a sari, which can be a gaseous product, it can be a liquid substance, it can be a solid product as well. Now, depending on the nature of the product, there are possibilities that some of the products, before it reaches the godown of the consignee, are getting lost on the way. So this type of losses are no way the responsibility of Mr. Consignee, because consignee has not received your goods, man. You cannot blame the consignee that he is the responsible person who is responsible for the loss of the goods. The carrier or the carrier guy who is taking the goods, might be he was little negligent. Maybe the goods are of that kind of, it can be a gaseous liquid or a type of product. Say it got evaporated, half the product got evaporated. What you can do? You can't do anything. So this is called transit loss, where consignee cannot be blamed. This type of losses are taking place before it reaches the gateway of the consignee. So therefore, consignee will take an account of how many units of goods he is receiving. Say for example, if consignor is sending 100 bottles to the consignee, and let's say it's a liquid product, some 10 bottles got lost in transit. It didn't reach so far the consignee's gateway. How many units of goods Mr. Consignee will receive? 90, 100 minus 10. So his accounting will begin with 90 only. His accounting will not begin with 100, because he has not received 100 for any reason. He has just received about 90 units. So it is beginning with 90 units. Next time when he will do the subsequent set of evaluations, he will consider that I received 90, from there I sold this many units, and therefore I have so many units in my closing stock. Now let's say in transit loss, there is a loss of 10 bottles. Consignee finally booked the receipt of 90 bottles. Consignee was successful in selling 75 bottles in the market. What's happening with the remaining bottles? 90 minus 75 is 15. Therefore, these 15 bottles are known as closing stock. Understand? Consignee will never understand in this way that 100 minus 15, 85 is the closing stock, because he has not received. No, he received only 90. So from there he sold 75. 15 will be in the closing stock. Can be one option. So this is about the transit loss, right? Okay. Now we will come to the normal loss and abnormal loss. Normally, when in the next level, as you will do the costing, you will come to know there's a chapter called process costing, right? In CAS and foundation level we don't have, but we do teach them at the intermediate level of CMA, and you guys will also learn in your BCom and in your costing subject. There's a chapter called process costing. What happens there in process costing, very vividly we used to discuss about two types of losses. Who are they? They are normal losses and abnormal losses. What is basically a normal loss? See, how much ever careful you are, there will be certain quantum of loss which is not in your hand. Let's say you wrote an exam. It's on 100 marks. You wrote fantabulously well. It's really nice. So how much is your expectation? 100. But when are you getting the paper, it's about 92 out of 100. So how many marks you didn't get which you expected you will? You lost about 8 marks in the whole course. It's quite natural. Will you be falling flat on the floor and start crying and going for evaluation? I don't think so. Because it is just about 8 marks which can happen due to any reason. Which you thought you did, you didn't. Which you thought were right, finally came out to be non-right or incorrect. So some of the mistakes which are inevitable to happen, how much of a skill, care and diligence you exercise. Those type of losses are fully unavoidable, and they are also limited. They are known as normal loss. So when you expected that you will get 100 out of 100 because of your extreme level and high confidence level, unfortunately you got 92. You didn't feel extremely bad. Yes, little bit of frustration was there, but that was manageable because it's 92. No, it's a good score. but you just got to see that you are having 56 out of 100. What's the difference? You expected 100 out of 100, but you got 56 out of 100. So what's the shortfall? 44 marks. 44 marks shortfall cannot happen out of a wrong estimation. I mean, not only a wrong estimation, you didn't understand only what you did. There are so many mistakes which you did not understand and realize. There are so many mistakes which came to the notice of the evaluator, but you thought it to be a right. Is this something natural? It is not natural. It is not normal. If this type of losses are happening, then definitely it is an example of abnormal loss. Let's go back to our example. When we have, I started my discussion, I remember, like there are 100 bottles which are sent by the consignor to the consignee, and on course of transit and all, it got about 10 bottles lost. Fair enough? Okay. 90 bottles received by whom? Mr. Consignee. Now, this abnormal loss can happen in two steps. It can happen after reaching the godown of the consignee, or before it reaches the godown of the consignee also. It can be considered as abnormal loss. Let's say it has reached the godown of the consignee. Consignee put a record of 90 bottles. There was some mishap in the shop, and thereafter there was a uplifting of a shop. You cannot resist all this. That means somebody just took out the goods. I think you know the term uplifting, misappropriations, which are very much associated with the normal course of business actions. So let's say there is an uplifting of a shop, and out of those 90 bottles, 40 bottles are not there. It is not coming to the notice of the consignee. What Mr. Consignee will do? He is right now sitting with 90 minus 40 is equal to 50 bottles. Is he supposed to have 50 in his hand? No. He is supposed to have how many in his hand? 90 in his hand. Due to the uplifting done by whom, what will happen to them is not our discussion. 40 bottles are misappropriated. Whose responsibility is this? Yes, very much consignee is responsible. It reached your gateway, right? But you were not careful enough. That's the reason all this happened. Suppose you were careful. Every time you used to lock and go. Whenever you are leaving your shop, you are just locking and carrying the key. Once upon a time, you just left it open and went out, and somebody came and took it out. So it's your mistake. No, consignor cannot leave you just like that. He will definitely blame you. You have to pay for the loss of this 40 bottle because it happened after reaching your godown. Because somewhere 5-10 bottles I can consider. Anything within a percentage of 5 to 10 can be considered as normal. When it is crossing the boundary, where in normal loss calculation also we have never seen any normal loss as a percentage or proportion of input exceeding the boundary of 10 or 15%, because that doesn't become normal. That doesn't come under the category of normal. Then it becomes abnormal in nature. We qualify them as abnormal. So what's happening here? It is becoming an abnormal loss. Yes, consignee will bear the loss, he will pay for it. Those are different. But my effort is to explain you the difference between the normal loss and abnormal loss. So normal loss within the normal limit, and abnormal loss is something even you could have resisted. Suppose you were little careful and little more alert because of your negligence, because of your carelessness. If something goes wrong in a different way, then it is known as abnormal loss. So this is the difference between normal and abnormal loss. Yes, it can happen before it reaches the godown of the consignee. Say this 100 bottles are uploaded, and the 100 bottles are going to reach Gujarat by 3 days of time. On road it is going, the truck is taking about 3 days time it will take. Same, 40 bottles got dropped. Who is responsible? I am not breaking head for that. It may be the courier. He might have done some lifting. He might have sold it out at a very higher prices to somebody because he thought he will get money and all that. Those are all apart, unrelated discussion. But 40 bottles are not there. Is this something natural? 5-10 bottles can go for a toss while lifting 1 or 2 can break. How come 40 bottles are replaced or not there? Therefore, this is an abnormal loss. But here, you cannot blame your consignee because he is not seen only any bottle. It happened before it reached the border of Gujarat. Where is he? He is in Gujarat. And where is the bottle getting lost? On the way. Though it's an abnormal loss, happened before goods reaching the factory of the consignee. So this is known as abnormal loss, but consignee is not responsible. Okay, so this is also one type of loss. We'll talk about the valuation of the closing stock. What is valuation of the closing stock? See, for example, Now you got the goods, whether it is 90, 100 or whatever. Let's say in our example, we took a transit loss of 10 bottles and consignee got about some 100 minus 10, 90 bottles. 90 bottles he will be selling in the market, correct? These sales will happen at a price which will be mentioned. So the sell value will be calculated. After the sell, whatever is remaining is known as closing stock. You received how many bottles? You received about 90 bottles. Let's say you successfully sold out some 75 bottles at some designated rate. Rate and all is not a matter of concern. So how many bottles you are having now? You are having another 15 bottles. These 15 bottles are known as what? They are known as closing stock. Now my technical question is this closing stock which is lying with Mr. Gujarati, is it Gujarati's property? Because goods are Bangalore products. Though it is in the Gujarat shop, getting sold out in the hands of the Gujarati to his Gujarati customers, I agree. But is it the property of Mr. Gujarati, I mean the consignee? Or it is not the property of the consignee and it is the property of the Bangalorean, that is the consignor. What do you feel? It is the property of the consignor only, no? Because no debtor creditor buy-sell transaction is established here. Nobody has passed on the ownership of the goods or title of the goods. So it is very much retained by Mr. Consignor. He has only given the right to use the goods and get it sold, realize the money, send me the money. By cash, credit, whatever collection you will get, I'll be giving you the compensation. That's different topic. It is not the property of the consignee. So what consignee will do when he will prepare at the end of the financial year the trading PL account and the balance sheet account, he will be showing all these items, his own closing stock and closing stock on account of consignment. That's what, if you remember that when you have done the final accounts, sometimes in the trading account credit side where we depict the closing stock and also in the balance sheet where on the asset side we take the closing stock, we sometimes segregate the closing stock in different types. We used to call them as closing stock of my own and closing stock on account of consignment, because it is there. It's not mine, correct? It is not mine. It will be mine. If I am buying it, then only it will be mine. But I am not buying. No, I am just taking the responsibility of getting it sold in my market. Now, how the accounts will be settled at the end of the year? Consignee has sold a bundle of things, say about 75 bottles being sold out. So, he will send off the money either in the form of check or draft or whatever modes are there. So, money will be sent as and when the collections are made, the customers have paid it and all that. Now, he will also send an account statement that so many units are sold out of so many received units and so many units are lying in the closing stock. If they want to continue the consignment relation in the next year, he will try to sell out another 15 units. He may send some other new fresh units, or if they want to terminate, let them terminate. It will come back to him. So this is how the basic things for consignment actually work. So I have given you the list with all explanations, with the journal entries, with the calculations, with the formula. Just request to you, take a day's time, go through it, find out. If at all any point you feel is not coming to your mind, then I will further explain you. So I'll post one more video to you wherein I'll literally explain you the journals, what I have sent it, and with a sample question so that you can understand. Fine.